Let's start off tonight's show in Ethiopia, where the government will now allow foreign banks to set up local subsidiaries and also foreigners to acquire shares in domestic lenders. Now, of course, this is all part of its broader plans to liberalize its economy by opening up the country to foreign investment in sectors including banking, telecoms, transportation, and aviation. Now, the bill, which was approved by the cabinet on Friday, is expected to be presented to lawmakers for approval. The aggregate shareholding by foreign nationals and foreign-owned Ethiopian organizations in a bank will now be limited to a 40% of total shares. Direct shareholding by strategic investors will also be limited to a 30% stake. Now, of course, we know there's been a privatization effort ongoing in Ethiopia. And let's get an update on the country's efforts to, of course, liberalize and privatize its economy so far. We're now joined by Gabriel Negatu. He's a senior fellow at Atlantic Council's Africa Center. Mr. Negatu, it's always a pleasure to have you with us on the show. Now, what do you make of this latest move to, of course, allow foreign banks into the country and also to open up domestic lenders to foreign ownership? What exactly does it signal for you about this government's pursuit of economic liberalization?
Thank you. Thank you for having me on. And as you rightly pointed out, this is part of the larger effort by the government to revitalize the economy and create a more market-oriented economic system. So the bill that was approved allows subsidiaries of banks, foreign banks, or shareholding in some domestic banks and so on. But this is part of the larger, what they call the homegrown economic reform program that looks at liberalizing the economy and promotes additional foreign direct investment into sectors like banking, telco, transport and aviation, and mining more recently. So it is consistent with the homegrown economic model. Now, you'll agree with me that, you know, with about 120 million people, Ethiopia is one of the biggest economies in sub-Saharan Africa, and it's a market that's long been eyed by foreign investment after being closed off for decades. So when the central bank governor recently announced that he would be granting 5 licenses to international banks, that got everyone excited. And now this draft legislation is sailing through Parliament, I think will allow him to selectively award permits to international banks with some, they've set out the criteria, and those that meet the criteria will be able to come in as either strategic partner or 40% ownership. But the whole idea is to inject new money, inject technology, grow the financial inclusion strategy, and allow people to get better product and services, because right now the banking industry is very archaic. Services are not up to standard, up to international standards. So the admission of these international banks will definitely raise the standard for the banking industry. And this is one of the lessons we've learned from the admission of Safaricom into the telco sector. We can talk about that, but I think something similar will happen in the bank industry again. Thank you.
Well, Mr. Negatu, as you mentioned, this is a big one because investors, of course, have been waiting for the financial sector or the banking sector in Ethiopia to open, but not just yet, because lawmakers apparently must first pass this bill before we see any major movement on this. So is there any indication that this draft law perhaps could face any opposition?
No, I suspect it will face some opposition, but not strong enough to derail it. That's to say, the parliament is majority controlled by the ruling party, and there are some members of the opposition who may or may not oppose these privatization and liberalization schemes. And I suspect there will be some robust exchanges between the different parties and the ruling party. But at the end of the day, I expect the bill to sail through. Can't predict what the numbers will look like, but I think there's a critical mass of parliamentarians and lawmakers that support the initiative, so I expect it will sail through.
And one thing you also said, Mr. Negatu, is that this is pretty much a much needed move for the banking sector. So currently, aside from a handful of local banks in the country, the state-owned Commercial Bank of Ethiopia, that dominates the country's banking industry. In fact, it accounts for about 62% of assets and deposits. So give us some sense into the implications for the industry once Ethiopia does open up the sector.
Well, exactly as you rightly pointed out, the Commercial Bank of Ethiopia is the big elephant in the room, but then the sector has another 25 to 30 banks, locally owned banks operating, and these are, I would say, tier 2, tier 3 types of banks. There's probably one, the CBE is only tier 1, or maybe one of the few tier 1 banks. So this will have a significant consolidation effect in the banking sector, because many of the tier 2 and tier 3 banks, I suspect, will be consolidated, merged, or bought out by foreign banks coming in. For their own survival, some of these banks may wish to band together into a few bigger banks. So my guess is, when all is said and done, when it's all over, we may end up with about 5 tier 2 and tier 1 banks in the country. And as a result, the capital adequacy requirement will probably be raised, so fewer banks will be able to afford it. The regulatory regime will be strengthened, so to ensure that compliance is kept with. And many of these smaller banks will not be able to survive this kind of increase in the adequate capital requirement and the stringent compliance issues. So invariably, you will begin to see some consolidation. And like I say, I'm predicting it on your show that we will end up with perhaps 5 or so tier 1 and tier 2 banks at the end of the day.
Well, we'll certainly be watching it closely. But another thing you said, Mr. Negatu, is that this is part of a broader push to liberalize and privatize Ethiopia's economy. The telecoms industry sort of led that march. It opened to outside competition around 2019. However, so far, we did see the sale of the state-owned telecoms operator Ethiotel to foreign investors. That was put on hold last week. Now, aside from Safaricom coming into the market, what are your thoughts on what the process has looked like so far? What has the privatization of specifically the telecom sector showed us about the will of the government when it comes to this privatization effort?
Well, the Safaricom coming into the telco sector was perhaps one of the biggest privatization schemes in Ethiopia, and I dare say in Africa. Very successful. Safaricom has come in. One of the things that Safaricom has done, and done very well, is it has reignited and revitalized Ethio Telecom, which is the major shareholder in the industry. In addition to its own expansion and setting up and so on, it has revitalized and woken up the sleeping giant that's Ethio Telecom. And as a result, today I think customers in Ethiopia are getting excellent telephone service, telco service, either from Safari or from Ethio Telecom. My guess is the same will happen with the banking sector. And what we recently experienced in terms of the pullback of the remaining shares from the market is largely a result of not getting enough subscribers, because the government wanted to sell this partly to local investors and partly to international investors. And they have some figures in mind that they expect to get out of this process. And the first few rounds did not meet their expectations. So the government has withdrawn the offer, and I am confident they are looking at the valuation and to see whether or not the valuation is indeed the right valuation, and will put it back in the market again in the not too distant future. But for right now, it's being re-looked at with a view to ensure that the valuation is indeed what the market can bear.
Well, as I said, Mr.